From the local equity front, we saw that the ASPI remained relatively stable at around 11,465. It ended the week at 11,465. Meanwhile, the S&P actually fell last week by 3.4 points to 3,244. The market's average daily turnover of last week declined 45% week on week to 1.2 billion rupees per day. We saw this weak sentiment trickling down into today's market as well, which is Monday's market, with the market ending with a turnover of 650 million daily turnover. We believe that the reason why the market is having such weak sentiment as of right now is because it's anticipating that the government will fall short of its fiscal targets by around 400 billion rupees. Given this shortfall, the market is also anticipating that certain tax reforms will come into place with the budget that is to be announced within this year. Another reason that we believe the market has this weak sentiment is because it's looking for a catalyst event to drive the market in the medium term. We expect that this catalyst event would be the reduction in the interest rates that would be announced by CBSL. Once this does come into fruition, we do believe that the market will be able to start moving upwards once again. Looking at the T-bill auctions last week, we saw that the 3-month bill yields fell down by 30 basis points last week, primarily because the EPF confirmed its participation in the DDO along with the settlement of the eligible treasury bonds last week. From a T-bond perspective, we saw that the auction that was held on the 12th of September, which offered 90 billion rupees, there was around 244 billion bids coming in, bids that were received for this auction, and 90 billion were accepted in the auction as well. From a secondary market perspective, the secondary market was liquid for the 3 to 5 year 10-year government instruments, government securities. The most traded instruments were also the 3 and 5 year bonds last week as well, and they saw a decline of around 100 to 150 basis points within last week. Looking at the global market, the Nasdaq actually fell 53 basis points last week amidst a 4% increase in oil prices globally.